Hi there, and welcome to another edition of Ask Spurrell CPA. Today we're talking about the T4 and T5 filing overview. And I have May here with me once again to help me. May's new to the firm, and last time we heard all about how she graduated from NAIT with an accounting degree. She was a member of the accounting club. Great resume. And then May, you came and you applied to our firm, and what happened?
The first time I came, I just passed the interview, everything went through. However, no opening, so I did not get hired. So I never gave up. I continued, I saw their opening again, and I came back.
Right on. So all of you, whether you're looking for a job out there or you have a business out there, the key thing is, you have to keep trying. You have to be diligent, especially in today's Alberta economy. It's easy to apply somewhere once and it doesn't work out. And then to give up, or it's easy to try to sell your product or business as a business owner and it doesn't work out and give up. But you got to keep going. So that's why May's part of this team for sure. So the quote that I have in terms of the T4 and T5 filing overview, it's from Michael Gerber. The fatal assumption is if you understand the technical work of a business, you understand the business that does that technical work. So just because you're a good dentist or drywaller probably doesn't mean that you know a lot about filing your T4s and T5s, which is necessary if you're running that sort of business. And the statistic, one of our favorite statistics is 60% of all small businesses go out of business. And one of the top 3 reasons that that happens is that they run out of cash. And the story that we'll have is business owners who haven't filed their T4s or T5s, or they haven't filed their T4s or T5s properly, they trigger their payroll audit. And now all of those gray area transactions that they wanted to keep under the carpet, they're going to be brought up to the forefront and they're going to get scrutinized. So May, what are the questions that these business owners should be asking in terms of filing T4s and T5s?
Generally, what amounts need to be recorded on T4s and T5s?
So money that is coming out of the corporation for personal benefit or non-cash personal benefits that are coming out of the corporation, whether it's coming out for owners or whether it's coming out for employees, those are generally going to have to come out in the form of salary, which results in a T4, or dividends, which results in a T5. So again, money that comes out of the corporation or non-cash benefits that come out of the corporation, they're going to need to be recorded on either a T4 or T5.
And what is the difference between a T4 and a T5?
So T4 relates to wages or salary. So it's employment income on T4s, and either a owner of a corporation or a arm's length employee of a corporation can get a salary or wages or employment income out of a corporation. T5s, on the other hand, these are dividends from a corporation. So dividends are only paid to the owners or shareholders of a corporation. So those result in a T5. So again, employment income, T4, dividend on a T5. Also, it's important to note that employment income, the T4 income, it's an expense on the corporate income statement. So see it deducted on an income statement. Whereas a T5, it's directly removed from the retained earnings. So it's direct profits being removed. They don't show up on the income statement. So slightly different there, but those are the differences between T4s and T5s.
When do these T4 and T5 slips need to be filled?
Both of these returns, they need to be filled out and filed in February. So at the end of February, they're due. You have to file your T4s and T5s by February 28th and February 29th on a leap year. And you gotta get them into CRA.
Are there any source deductions or payroll remittance for T5s?
No, T5s don't have source deductions, so it's just the employment income that have source deductions where you have to be sending in the remittances off of each check. So T5s are slightly different. We don't need to be sending in any source deductions for T5s.
What are the deadlines to submit payroll remittance to CRA for T4 amounts?
Most small businesses, if you cross certain thresholds, you're going to have to remit more frequently, but most small businesses have to submit their payroll amounts each and every month. And what they have to do is by the 15th day of the following month, the month following where the money was taken out of the corporation, they have to submit the payroll remittances for that. So the money that was taken out in January, the payroll remittances have to be submitted by February 15th. And the money that's taken out in February, the payroll remittances have to be submitted by March 15th. Now, not always a great deadline to wait to the last second to do that, but that generally is a deadline. And then it's important to realize that there's a very important submission in January, where it's your last opportunity in January, usually by the 15th, to submit any payroll remittances for the prior year. So anything submitted by January 15th, it could be used to apply against the prior year, whereas anything after January 15th, it's either late or it deals with the next year.
And upon filing your T4s, how does CRA know if you paid enough source deductions?
Yeah, so the T4s, they're going to total up, what was the CPP taken off of each check. And of course, the employer contribution has to match that. And then what was the EI removed off of each employee's check. And then what was the employer contribution? It's a set rate based on that. So it's, times 1.4. And then what's tax taken off each check. Then they're going to add those 5 items together because it's reported on all the T4s. So you file the T4s along with the T4 summary, and it lists the CPP removed from checks, the CPP that the employer should have kicked in, the EI removed from checks, the EI that the employer should have kicked in, and the tax removed on checks, and then it's going to have a total. These are the total remittances that should have been remitted, and that comes with the T4. And then they're going to compare that against the total remittances that you actually submitted, and now they're going to know, did you submit enough payroll remittances, or are you short for the year?
If CRA has concerns with these amounts, what sort of audit will be triggered?
It's called a payroll audit. So usually, in a better case scenario, they'll send it in. You're short, and maybe they'll send you a bill saying pay this. But in a worst case scenario, they're going to trigger a payroll audit, and that's where they're going to look into and see, hey, where the proper was there T4s and T5s issued for all the circumstances that there should have been. Or there's extra T4 amounts, and is there extra remittances that are now owed?
What are the 2 main functions that will help happen in a payroll audit?
So what's going to happen in a payroll audit? The payroll auditor is going to come in, and they're going to ask for generally the general ledger and the bank statement. Okay. And they're going to start with the bank statement. So they're literally going to go through all the bank statements, and they're going to see what amounts went out to people. They're going to start with people. So if you paid, you paid your cleaning service, and it's Smith Cleaning Services Inc., no problem. That's the payroll auditor is going to exclude that one. But as soon as you paid an amount to John Smith, even if he was your cleaner, they're going to start to question: is this person an employee? Is this person a contractor? Should we have issued a T4 amount to them? So they're going to total up all those amounts issued to employees, and they're going to compare it to what the T4s are actually filed. So that's function number 1. They're going to go through all the bank statements and identify all the amounts that are actually paid to individuals rather than companies. And they're going to determine, have we issued T4s in every case that we think is necessary. And then number 2, they're going to assess all of the personal benefits. So what are the personal benefits, usually of the shareholder, because it's not just cash that's removed. Did the company pay for expenses that had rather than a business purpose, but more of a personal benefit for the shareholder? And are those personal benefits also included in the T4 amounts? And if they're not in the T4 amounts, was there T5 amounts? Did it flow through the shareholder loan? So.
And what are the 2 main things you can do to avoid a payroll audit?
Number 1, file on time. So even if you're a little uncertain, even if you're short on funds, you want to file on time. Number 2 is you actually want to pay your payroll remittances on time. So if you're late, those are the generally the 2 things that are going to be a problem. So, and again, if you don't file enough, they're going to find out in February when you file, because it's not going to match what you paid for last year. So you want to file on time and pay your payroll remittances on time. That's going to just prevent having to go through all of those items that are maybe a little more subjective and a little more gray. They're not always black or white on how they should be treated. But generally, if you file on time and you pay your payroll remittance on time, there's a better chance that no one's actually going to look under that mat.
And if you have a short paid the remittance for an employee, is there anything you can do?
Now, sometimes you short pay the remittances for employees, and let's say you're short on funds and you can't overcome that in the short term. So sometimes you've paid payroll remittances for the employer as well. So basically, for the shareholder, it also has a T4 that was supposed to be declared. Sometimes there's the ability to move that T4 income and redeclare it as either a shareholder loan or dividend income. Now, it means a lot if you didn't make any formal declarations throughout the year, but it was just money removed by the shareholder, and it was contemplated that it might be salary, and you paid payroll remittances on that. Sometimes there's ability that you can reclassify it as shareholder loan or dividends because it wasn't really classified to begin with. And that means some of the payroll remittances that you paid for the owner can be applied to the employees because there's no chance to reclassify the employees. Their T4 has to be done. So sometimes there's the ability to use payroll remittances that were paid for the owner because it was contemplated that T4 might be declared for them, but instead we could apply it against the employees and find a different mechanism to pay the owner.
Why should you assess personal benefits prior to a payroll audit?
So now we're in the scenario where we've done everything we can. We filed on time. We paid our payroll remittance on time. We have a payroll audit anyways, or hey, we didn't get on the train quick enough, and we're going to have this payroll audit. You want to go through and assess your personal benefits, and it comes down to credibility. So you don't want to be sitting there in front of the auditor and saying that my $12,000 trip to Jamaica was 100% business expense and had no personal benefit on it. Or I have this company truck and it's the only vehicle that me and my family own, but I have no personal benefit from it whatsoever. So we have to assess these personal benefits and charge these personal benefits to the shareholder via the shareholder loan before the payroll auditor comes, and we want to go through it. Because if you haven't done that exercise at all, now the auditor knows that you haven't done that exercise at all. And then you try to make the argument that they are 100% with zero personal benefit, and you just lose all credibility. So now they look at everything, even the things that might be a little bit out of the ordinary, but that's really just the way your business existed. So maybe you had to do 3 conferences for your business, but you failed to identify that there was any personal benefit for the vehicle in the business. So now they're why would they not challenge you on the other one when you're clearly being unreasonable in one area? So it's really important to go through and establish what those personal benefits are and charge those personal benefits to the shareholder loan prior to having the payroll audit and letting the payroll auditor look at it, because then it shows them that you tried in good faith. You're trying to you're being reasonable about what those personal benefits are, and they're more likely to maybe cut you a break in some other areas and more likely to take your assertions at face value. So I think that's what we have here today in terms of a T4 and T5 filing overview. As always, please leave any comments below and we'll address anything you have in any future videos, and hit the subscribe button if you want any future tips for helping you run your business. Thanks very much.